Hey YouTube, today I'm investing in a popular REIT and a sure thing ETF. Stick around to find out what they are, and afterwards I'll cover some investing news. If you aren't sure where to invest your money or where to begin your investing journey, an ETF or exchange traded fund might be a good place to start. If you don't know what an ETF is, it's a fund that trades like a stock. There are benefits and drawbacks to it, but mostly I'll cover the benefits today, just really briefly. These funds hold assets like stocks, bonds, commodities. Unlike mutual funds, ETFs are basically fee-free, more tax efficient, and can be traded like stocks. So if you want a more hands-off approach, mutual and index funds might be the way to go. As for me, obviously I'm a more hands-on type of guy, so ETFs are going to be for me. This particular ETF I'm invested in tracks a dividend yield-weighted index of the S&P 500's least volatile 50 securities. So there's no such thing, as I've said in the past, there's no such thing as a sure thing. But this company is pretty rock solid. I have no reservations about investing in SPHD. And I just said company. I didn't mean company. I meant fund, ETF. This ETF is as rock solid as you're going to find. And this particular ETF is managed by the Invesco company. And they've got a dividend yield. It's got a dividend yield of 5.8%, and it pays $1.86 a year. And next up is a uber popular REIT. It was recently added to the vaunted Dividend Aristocrat list. So there's many reasons other than the Dividend Aristocrat list that it's popular, and I'll touch on that here. With a dividend yield of 5.3%, it would be a welcome addition to any high-yielding portfolio. Some of its top 20 holdings are like the who's who of retail. It includes Walgreens, Walmart, FedEx, Kroger, and Home Depot, just to name a few. So you can say it's safe to say it's pretty stellar. And I'm still 100% comfortable investing in O Realty Corporation. I have no reservations whatsoever on this monthly paying dividend. Even on their website, even on O's website, they say it's the monthly paying dividend company. So they're pretty proud of that fact. I don't think that's going to go anywhere anytime soon. Well, now that we've covered my recent additions, let's see if I can put up how much I added in dividends here. I'm not sure exactly how much it is. $12 maybe? I don't know. That would be a total of about 6% of what I deposited. Which is right about there. But yeah, on to some news now. Okay guys, now that I've covered my dividend increase and my portfolio, let's go ahead and get into some news. Here we are. Okay, let's go ahead and get into this. Jamie Dimon captures the stock market moment. Thought this was kind of interesting. Go ahead and look at this real quick. The Fed has your back. S&P has recovered 33% from the March lows, which is really interesting because I am fully recovered. I don't know if you guys noticed, I put the little caption that I had in the beginning of the video there, that I'm fully recovered. I'm actually up like $60 right now. All right, and here's what really interests me. Expectations for future dividends have recovered as well. I've only lost a couple dividends, and not complete cut, just decreased, so that's good news for me as a dividend investor. Let's see here. The CEO of J.P. Morgan basically said it wasn't a bazooka, but the Fed that used the entire military to aid in this crisis. So yeah, it's when it comes to quantitative easing, the radical fiscal action has stopped the L-shaped recovery, even though it won't be V-shaped either. Unemployment and diminished consumption cannot be magicked away, basically. Here's what's interesting to me. It says the stock market is looking even further into the future than usual to justify its valuations. I've seen a lot of things online. People are confused as to why the stock market keeps gaining. For me, that's a pretty good answer right there. See, yeah, the central banks learned from their post-2008 lessons that this time they've barely put a foot wrong this time. Wells Fargo. Yeah, this is a pretty good it's a pretty good article here. The sound of economies crashing back to life can just be made out over the worrying of the monetary printing presses, allowing even bombed out economy stocks to recover, not just the new ones. And here's where I'm interested in. Notably, some of the most recent action has been high dividend stocks, which have been forced to, just like what I just said, to skip shareholder payouts at the height of the crisis, and it's only been a few for me. Investors had feared that the dividend bans might last several years, but now they think it might only be a quarter or two. I think Shell's going to bounce back really fast. Gas is already increasing in price around me. I don't know how it is around you guys. You know, investors aren't brimming with confidence. American fund managers say that May shows an extreme bearishness, with 10% expecting a V-shaped recovery and 68% expecting prices to fall. Of course, given the recent positive news on the virus and gradual endings of lockdowns, the June survey might be different. So in other words, everything's looking up right now. As you can see in my portfolio, I'm already up, but that's not the case for everyone. So it's, you know, if you've invested in blue chip, high dividend quality stocks, you're probably up too. Anyways, if you like this video, give me a thumbs up, comment down below what you think. Subscribe, it's completely free. I'd love to have you follow me along in this journey. So again, thanks a lot. Take care. We'll see you guys next week. Bye-bye.